Hey, what's up, stock compounders? Brad here. So Li Lu delivered a Q&A fireside chat with Bruce Greenwald, his professor, 28 years ago at Columbia Business School. It is so rare for Li Lu to give these talks. So when I found out about this, I was so excited. Today, I'm going to share. There's like 5 segments in this talk that I want to kind of go into a little bit. And then at the end, there's a number of sound bites or like quotable bites from Li Lu that I think are just awesome. So I'll share those at the end. So the first segment I want to talk about is when Charlie Munger started investing with Li Lu. It was in 2003, 2004. And I didn't realize this. For many years, Li Lu and Charlie Munger had dinner every Tuesday. Okay, Tuesdays with Charlie, which what a fantastic thing that must have been for Li Lu and for Charlie Munger. I mean, two incredible investing minds sitting down every week. And then he says it's safer to have role models among the eminent dead. All right. Of course, Charlie is a big role model for Li Lu. So there's a little bit of risk in that. And the reason it's risky to pick role models that are still alive, there's always that possibility that they will disappoint you. Okay, so I thought that was an interesting thing for Li Lu to say. And then the biggest thing he learned from Charlie Munger, number one lesson Li Lu learned from Charlie Munger is to maintain equanimity in the face of ups and downs. Rational composure, commonsensical approach to challenges. Obviously, that sounds great on the surface. It's very difficult to do in practice. So that was the first segment I wanted to share. The second one is regarding the Chinese security market, okay, and China in general in terms of the growth prospects of China. So the Chinese security market will become increasingly a very, very important, ever more important component of the global market. So it sounds like Li Lu is very bullish on China overall. The characteristics of the Chinese economy have changed fundamentally. Okay, this was really insightful here. Up until 10 years ago, what really propelled the Chinese economy was international trade. Okay. We're all familiar with that. After the citizens became middle class, right? So you've got this rising middle class in China. Their demand changed, okay, from working, saving to working, saving, and consuming. Okay, so you have this fairly rapid rise in consumers in China. So that shifted the dynamic of the economy. Roughly around 10 years ago, the Chinese economy has slowly evolved into more of a consumer-driven economy. And I think this is a really interesting point from an investment in Alibaba. Okay, there's more and more consumers in China who are, purchasing through retail establishments like Alibaba. Last year was a watershed year. Okay, this is 2020 he's talking about, in that the total volume of retail sales for the first time overtook the U.S. Okay, China was the largest retail market in the world, 6 trillion in China versus 5.5 trillion in the U.S. in 2020. Obviously, it was a bit of an odd duck year, but that's been the trend. This in terms of retail sales in China, it's been trending towards what it hit last year. China is emerging to become the most dynamic, fastest growing consumer market in the whole world, and that is likely to continue for many more decades to come. Okay. Very strong statement about China there. And he says, China remains one of the best markets for value investors. So that's a little segment about China from, one of the best investors in the Chinese market. The next segment, he was asked, how do you deal with rapid change? Okay. Technology, the pace of change in technology is accelerating. So how do you deal with rapid change? There's three possible ways as an investor to deal with rapid change. One is to find businesses that are well insulated from technological change. Okay. The second, find companies with management that's capable of adapting to these technological changes better than their competitors. All right. So that's the second. Third is find companies that are leading those changes or enabling those changes so the changes are really on your side. Okay, so it's really three very different approaches to investing in this environment of rapid technological change. He says, and I like this, we are still in the middle of that gigantic wave that started with the invention of semiconductors, 50 years ago. We're in the middle of that wave. I like that kind of 50,000 foot view. I think that's important to see it that way versus kind of getting lost in the weeds of the particular technologies that are coming out today. So that's, now we're on to the next section. He was asked about Tesla. What's going to happen with Tesla? What's going on in the auto industry? He said the auto, and bear in mind, Lilu's largest position is BYD. Okay, very influential electric vehicle company. More than that, but that's a big piece of BYD. So Lilu is very familiar with the auto industry. He says the auto industry is facing 4 to 5 megatrends simultaneously. First is electrification, right? Electric vehicles. The second is ride sharing, Uber, Lyft in the US. I'm sure there are many others overseas. The third is autonomous driving, cars that can drive themselves via sensors. The fourth is intelligent design. Okay, and I'm not fully sure what Lilu meant by intelligent design. I assume, fuel savings through aerodynamics and being able to have greater capacity for the same amount of materials that's going into vehicles, things like that. And then the fifth one, which is kind of the backdrop of all of this, is climate change, this carbon neutral revolution, shift away from fossil fuels towards renewable energy sources, solar, wind, things like that. So Lilu says this 100-year-old industry is being turned upside down. And other than housing, it's probably the biggest industry. So the prize for the winners is enormous. Okay, vehicles, transportation, huge industry. In the process, the competition will be very intense in the process of figuring out who the winners are going to be. The winners need to have a certain scale in order to win. All right, and that BYD comes to mind, but Apple also came to mind for me. You can see, if you look at Lilu's 13 Fs, he bought Apple in the fourth quarter of 2020, which I think seems strange to a lot of people. It seems strange to me, considering how much Apple had grown since Buffett bought it back in like 2017 or something like that. It was surprised to see Lilu buying the largest public company in the world. But this may be part of that investment thesis. That huge cash hoard that Apple is sitting on may be a big piece of the puzzle to winning in this game here, this industry of transportation. It is still early to predict who will be the ultimate winner. Okay, but it is not early at all to predict that these megatrends are here to stay. Okay, so I mean, just that insight of that these megatrends, electrification, ride sharing, autonomous driving, climate change, if as an investor you can really integrate that these shifts are here to stay, I think there can really be some benefits in terms of looking through investments, looking through these filters, these lenses at your investments. So then the next piece here, and this is really the last chunk I'm going to be covering, and it's really, what is your advice for a new investor? Okay, how can you become a better investor? Not just for new investors, for experienced investors. What are the few things to really focus on? Okay, to really learn to integrate. So the first one, approach each investment like you were just given 100% ownership of the business. So you had an uncle who owned the whole business. He died. He gave you the whole business. Okay, so that's how you're approaching this business that you're considering investing in. You want to know everything. Okay, because you own the business, right? So you're curious about everything. You want to know everything you can possibly know about that business. And then a lot of the things factually, you don't really understand. Okay, you can read things, you can, collect data, but there's a whole nother level when it comes to understanding all of that. But keep at it, and understanding will develop. And of course, understanding isn't static. Businesses change over time. So it's a continuous learning process. But the point here is really to approach the investment opportunity as if you own the whole business. And that's something that Monish Pabrai has really kind of shifted to recently as well after reading Nick Sleep's letters. So the second one to focus on to become a better investor, maintain intellectual honesty. What you know versus what you don't know. Okay? Don't fool yourself into thinking you know something that you don't actually know. And I like this. This is something he got from Charlie Munger. I'm never entitled to have a view until I can find the smartest people on the planet who took the other side of that view. And I can argue my case better than they can. So that's kind of the bar that Li Lu sets for himself, a very high bar. The security market almost exists to find your weaknesses and exploit them. Okay, brutal. The stock market is brutal. If you have dishonesty, pretensions, it will find those and it will exploit them. If you do not maintain an attitude of intellectual honesty, you will get destroyed by the market. So it's a high stakes game here. You want to devote as much time as possible to study of the history of businesses and the history of great businessmen in the past. Okay, history can tell us so much, can inform us so much about, it can improve our judgment about what investments are worthwhile and what investments to avoid. The more you study companies, the better you are when it comes to judgment on good opportunities and judgment about the fundamental characteristics of the company you are interested in. I think this is a big part of why Charlie Munger, reads so much, largely about people who aren't alive anymore, right? Great businessmen of the past, businessmen, businesswomen of the past, learn from their mistakes rather than, doing the same things, making the same mistakes that they did. Such a marvelous way to jump forward. So those three things are critically important. just to summarize, start with 100% owner mentality. Continue to train yourself to have a high degree of intellectual honesty. And third, be a thorough student of the history of businesses. So those are kind of the 5 chunks that I wanted to share that were impactful to me. Now I just want to take a few sound bites. They're like, wow, that is gold. So the first one, Li Lu's talking about, what makes a great business. And he says the ability to compound over the long term goes against the natural order of things. Okay, the natural, and Charlie Munger talks about how biology is such a great subject to study, to apply also to businesses, to entrepreneurship. Cycles. Everything is cyclical. Growth, decline, cycles. So to find a business that can compound over decades, it's got to be a freak of a business, right? It shouldn't really exist. So that's what we're looking for. We're looking for these outliers that don't follow kind of the natural order of capitalism. I thought that was insightful. The next one, he talks about size of a business. When you're looking at investment opportunities, how important is it to look at small businesses versus looking at large businesses? He says size is one consideration, but it's not the most important. There are big businesses that are still growing at a robust pace, becoming even more entrenched as they get bigger. So they get better. The moat gets deeper as these businesses get bigger. So that there's a case to be made. Pabrai lately is all about finding these very small companies under 500 million market cap that have this spawning DNA. I think Li Lu here is kind of making the point that, well, maybe we shouldn't only focus on those uber small companies sub 500 million market cap. There's opportunity in large caps as well. So take that for what it's worth. He says, we look for companies that are already successful. We try to figure out what really makes them successful. And can that success continue? All right. Those are difficult questions. But that's, so important. It's so important to understand that. What makes a company successful? And can that success continue? Can that thing that's making it successful today continue to make it successful moving forward? Really teasing apart what makes the magic of a business, of one of these great businesses. If you can buy more as the price is dropping, that's a great measure for how well you understand the business. Okay, if somebody's not quite sure about a business and the price starts dropping, and particularly the faster the price starts dropping, that's how you get people out of there who don't understand the business, who don't have conviction in the business. So if that's happening to you, if one of your holdings is falling like a knife, and you're like, okay, this is great, I'm going to buy more and more, that's a great yardstick for whether or not you understand that business. And hopefully you're right, of course, because there's not much worse than buying as the thing goes down and finally it goes down to zero. That's never a fun outcome. Next one, humans are very good at rationalization, but not very good at being rational. Love that. I might have to tweet that one. That's a fantastic quote there from Li Lu. Any other sound bites that I want to share? I think that's it, guys. If you haven't watched this full talk yet, you guys, you have to watch it. Li Lu, Warren Buffett, back in 2011, threw out 3 names for investors that he thought were the best in the world at the time in 2011. This is a decade ago. The 3 names, we've got Seth Klarman of Baupost wrote the book Margin of Safety. Seth Klarman, everyone knows Seth Klarman in the value investing community. Second was Li Lu, okay, managing Charlie Munger money for Charlie Munger for 18 years now. And then third was Greg Alexander, which I just found out, and I'm excited to dive deeper into Greg Alexander. But you guys, Li Lu, I mean, phenomenal investor. So highly recommend this talk. It's just an hour and a half. I was scribbling notes, guys. It was very hard to condense the information into this video today. I have like 5 pages of notes, and I had to pause. It seemed, every 30 seconds just to get everything down. There are so many gems in this talk with Li Lu. So I'll link to it in the description. Check it out. Thanks to everyone who tweeted me and left me comments on YouTube, sent me messages on LinkedIn that this was happening yesterday. I am very glad that I experienced it in real time. And of course, I listened to it again after that just to really try to synthesize the nuggets in here. So hope you enjoyed this talk, guys. And with that, I will see you all in the next video. Take care.